Assalamu alaikum, everyone. Thank you for joining with us today. And you're welcome, warm welcome to you. My name is Samina Faisal. I am the country head for business development at JS Investments. And with me is Malik Zafar Javed Sahab. He's the head of compliance and risk, and he'll be sharing his experience with us. He has a wealth of experience on this topic. Let's go to our presentation now. Just give me a second. Okay, let's begin. So today's topic is very interesting. We'll be talking about voluntary pension schemes and why you should be investing, the benefits. We'll be talking about the features. We'll be talking about the regulations. And in the end, we're going to have a question answer session. And you can text us and we'll answer right back. Importance of today. Okay, so when we talk about retirement, a lot of different things come into your head. For me, retirement is all about free time, planning to do things that I always wanted to do but never had the time. But for a person who's 25, 35, maybe you don't even have the time to think about retirement. You're so busy shuffling your work-life balance and personal life. But if you want a good life after retirement, you need to ask yourself some very important questions. You need to ask yourself, are you prepared for retirement? Do you have enough savings to support your dreams? Now, everybody has different dreams, but the most important aspect is, are you planning? Let's take a moment to assess this. Let's take an example of an inflation of 8% on an average. Monthly expenditure, let's assume your current monthly expenditure is about 100,000 after 25 years. At the rate of 8%, this amount will increase by 7 times. Whereas the money that you have right now, let's say it's an equal amount. So today you're balanced, but after 25 years, this will be a mere 15,000. So we have a problem right here, and we're not prepared enough. So what you need to prepare, you need two things. One is you need to calculate your current expenses, and you need to build in the future inflation. Now, talking about the reality of retirement spending. When we think of retirement, we think, oh, our expenses are probably going to be half of what we have right now. I don't have to pay for my children's education and they're married and settled. But in reality, your expenses, as we just saw, are actually at the minimum will be the same, if not more, because now you actually have time to spend on all those, spend on your dreams, your plans. You might want to travel. You might want to pursue your hobbies. And more importantly, the cost of healthcare at this age is going to be much higher than when you're much younger. Therefore, one thing is very clear, you need a reliable source of income to help cover these expenses if you want to enjoy your life after retirement and you want to have an independent life. So what do you need to do? And what is that ideal retirement pool that we need to have to be able to live a comfortable life? Now, that pool will be different for different people. Let me just take an example of a person who's 30 and going to retire at 60 and expecting to live about 85. Now, this person, Mr. A, let's call him, saves about 10% of his monthly salary today to contribute for the retirement pool invested at a rate of 8%. Now, this person actually will have enough savings by the time he retires. And this saving, you can see from the graph here, that it will take him through his retirement years and beyond. So you don't need much. You just need to evaluate what are your savings and what is that amount you want and what is that amount you want at the end for to live that quality of life, and that will vary for different people. So here are some thoughts. When you've, let's say you've decided, yes, I want to plan. Now, these thoughts, these questions come into your head. When should I start preparing? Is it already too late? Am I, let's say, 50 now, 55? What do I do? Is it too late for me? Or I'm 25. Oh, I don't need to worry about planning at this stage. But actually, the answer is today is the time you need to start. Yes, if you're older, it's going to take longer. It's going to take, sorry, not longer because you only have a fixed number of years, but you will need to plan more carefully. You will need to put aside more amount if you want the same quality of life. But it's not too late. So the message here is it's never too late. And today is the time you need to start. Another question that people ask is that I'm self employed or my employer offers no benefit plan. In such a case, what do I do? Well, the obvious answer is that's exactly why we have a VPS. We've got a plan where you can voluntarily choose your amount, your frequency, and plan what amount you want post your retirement so you can live a comfortable life. So, yes, that's exactly why you should be choosing a pension fund. So what should one do? Is there a one window solution? Okay, there's another question. If you, what to do if you want control over your saving and pension benefits? Now, here's a situation. You have a pension plan, sorry, you have a provident fund with your employer. You may have a gratuity fund as well, but you need to see, is it going to be enough to meet your goals at the end of your retirement? So what do? You can actually direct that provident fund into a VPS, and thereby you can take control over your savings and decide yourself. Do you want to you want it to grow at a fast pace, take some more risk than your employer was planning to? So you have complete control over the way you see this plan growing. What should one do? Is there one window solution for retirement planning? The answer is yes, and that's what we are getting to. And from here, I'm going to pass on to my colleague.
Assalamu alaikum and good afternoon, everyone. The topic given to me is voluntary pension schemes. Let's discuss what are voluntary pension schemes. Voluntary pension schemes are savings cum investment vehicles that provides a comprehensive framework for life after retirement. You can personalize and define contribution structure for investments in VPS. An individual can invest for the life after retirement in a systematic and regular manner. Or your employer can provide you and establish a system for investing employees' retirement funds in VPS by contributing jointly through employer and employees' contributions. Pension funds are therefore a common asset pool intended to generate stable source of income over the long run. It helps to provide pensions to individuals when they reach the end of their working years and commence retirement life.
So I just want to add a key point here that VPS is a personalized system, which means that it's customized for every person. And it's defined, you define your own structure. It's a saving as well as investment vehicle. So you can save according to this, you can invest at the rate that you like, and it gives you a complete structure for your retirement. So carry on, please.
Now let's discuss some benefits on investing in VPS. Why one should opt for voluntary pension schemes? Voluntary pension schemes allows you to save for your retirement by providing a suitable investment options. You are free to choose when to start saving, how much to save, and when to retire. You can build up a basic amount of your retirement income by contributing to VPS regularly during your working life. It provides you convenience and flexibility. You can choose any of the allocation schemes by your choice that suits your risk appetite. VPS provides different allocation schemes based on all types of risk appetites and makes it possible to assign risk profiles individually. One can contribute in VPS and claim tax credit up to 20% of your taxable income. That's a major benefit for investing in VPS. Investment growth is tax-free. At the time of withdrawal, you can withdraw 50% of accumulated balance free of tax, and remaining 50% is taxable. However, you can save this amount from tax as well by investing in monthly income payment plans or approved annuity plans. Monthly installments from income payment plan or approved annuity plans after retirement, if invested for 10 years, are again exempt from tax. Continuing with the benefits of pension funds, I would like to draw your attention towards withdrawals from VPS that represent towards transfer of balance from a recognized provident fund are free from tax. No tax is deducted on such withdrawals. At the same time, it provides you protection. The participants' assets are protected by way of trust with oversight of trustee. Pension funds, pension fund managers, and trustees are subject to monitoring by SECP. It provides you portability. The pension account will remain in your name, even if you switch off your job, hence it is portable. Investment contributions can be resumed through new employer, personal contributions, or both at any time. At the same time, you have the choice to transfer your pension fund from one pension fund manager to another pension fund manager without paying any charges or penalties. Some pension fund managers also provide you free takaful coverage or life insurance coverage, which may be availed in case of any, for God forbid, events like death. I will request Samina to highlight some benefits available for the employers for investing employee retirement funds in VPS.
Thank you. So as Zafar Saab mentioned, it has a lot of benefits from an employee's perspective, but yes, there are also a lot of benefits for the employer. And there are some key ones mentioned here. Employee retirement funds can be outsourced to professional pension fund managers. So when you're giving it over to the pension fund managers, your headache is over. It is you don't need to hire the expertise in-house, which could be very expensive. You don't need a certain employee size to be able to transfer this to the professional fund managers. You could be a small company, large company, even one employee for that matter. It saves the time. It saves time and fund management expense for the employer. Obviously, if you have to manage it in-house, then you have to have the right infrastructure, which is very expensive since this is a very specialized field. Now, the employee's direct transfer of pension fund contribution to VPS are eligible for tax credit for the employees, and employees can claim tax credit on the contribution up to 20% of their taxable income. This is a feature actually. Another advantage is that it also saves time and effort of the Provident Fund trustees, because you've handed it over to the experts and they will do the job, and the employee is constantly engaged and they will choose their own scheme. So it is also a lot of responsibility from your shoulders. Let's go to the next point.
Let me add one thing. In case of transfer from recognized provident fund to VPS, such amounts or investments are not eligible for tax credit.
Okay.
Now you may carry.
Let's talk about some key features. We've spoken about the benefits, but here are some additional features. Like what's the minimum amount that I need? So in this case, there is no minimum amount. You decide yourself how much you want to save today to be able to reach that objective amount, that amount you want to save for your retirement. Flexible investment policy on monthly, quarterly, semi-annual, or annual. So these are just suggestions. You could completely customize your own plan, but mostly people like to save monthly, as we also gave us in our example. And so there's flexibility. Eligibility. Suitable for all ages, every Pakistani national over the age of 18 and holding a valid NTN, CNIC, or NICOP. So therefore, basically every adult. Portability, already explained by Mr. Zafar, it's transferable to any other fund. There are no penalties on this. Retirement age. Now, retirement age is between 60 or 70 years, or 25 years since the time of your first contribution. So let's say if you start at 25, then your retirement age will be 50, because 25 plus 25 is 50. But if you start later, then you can choose a retirement age anywhere between 60 and 70. This last point is more technical, but it's an important point. Deemed retirement age. In case a participant suffers from any of the disabilities as prescribed by the VPS rules 2005. So if you, God forbid, have an accident or an injury and it qualifies as disability under the rules, this will render you unable to work. Then you can claim retirement and all the benefits that go along with it as per the regulations. Do you want to add something?
Further I would like to add that in case of, God forbid, some participant or investors expired during the period of investments, the authorized nominees can withdraw their share as per allocated percentages at the time of registration of the account. So you don't need to worry that the survivors have to face legal implications or in getting succession certificates. If there is no legal ambiguity, the nominees can withdraw easily as per their allocated share.
All right. So we've been talking about customization, and this slide actually explains what that means. VPS provides different allocation schemes. So for instance, broadly speaking, there are three categories. You've got the money market, the debt market, and the equity market. And these funds are designed around these categories, money market being the safest. And therefore, you can say if your investment is 100% in money market, then you also have the lowest return and the lowest volatility because you're taking the lowest risk as well. So as you can see here in the last row, you can customize exactly as you like. If you're 25 and you're risk averse, you can still say, okay, I want 100% money market, or you can go for a balanced fund, which will give you a lower volatility as compared to 100% equity sub fund. And these categories, these are the given four categories. The one of high volatility where you can put a minimum 65% in equity and a minimum 20% in debt. So I'm saying minimum, which means that you can even go to 100% in equity, which means that this is the highest risk, therefore high volatility, and you may be looking at a long term and therefore higher returns. The second one is medium volatility, where you've got 40% minimum in the debt fund, and equity you've got minimum 35% and 10% in minimum 10% in the money market. So you've changed the distribution a little bit here. You further want to reduce the volatility, you're going to put more money in debt and even less in equity. And the last one, where you've got nil in equity, you might say, okay, I don't want anything to do with equity. I want my money to be in money market and some half of it in debt instruments. It says minimum 40, which means you can go more, but minimum has to be 40%. So this will actually help you choose, this scheme will help you choose according to your risk appetite. And therefore, you can make your money work for you as you wish. Therefore, when we were talking about you withdrawing your your provident fund, money from your provident fund, and choosing any of these options or even customizing, that's where you take charge and decide. And also it's very transparent, because then you can track it and see, are you getting returns, good returns. You can even switch between these categories. Once the scheme is selected, it can specify the percentages. Okay, that's fine. So now we'll be talking about the regulatory framework of VPS, which is a very important point here. And again, over to Malik Zafar Saab.
Voluntary pension schemes are highly regulated. The pension fund managers, pension funds, and trustees are subject to monitoring by SECP. SECP is regularly monitoring the performance and compliances of the voluntary pension schemes. I would like to draw your attention towards some laws that the ones VPS, such as Voluntary Pension System Rules 2005, Non-Banking Finance Company and Notified Entity Regulations of 2008, and there are various circulars issued by SECP. Further, some clauses and sections of the income tax ordinance deals with the withdrawals from voluntary pension schemes. How it works, the regulatory framework and entities involved in managing assets of voluntary pension schemes are presented here graphically.
Okay, I just want to emphasize the point that after mentioning all these regulations, the point here is that this is highly regulated, so your money is extremely safe. And what you need to see is how you want to invest it. So you don't have to worry about the safety of the money, but rather how to grow the money. And from the next slide, you can see.
When an investor or a participant invests in VPS, the amount of investments goes into the sub-funds, equity sub-fund, debt sub-fund, or money market sub-fund as per percentages selected by the participants. The pension fund managers invest these amounts as per the strategy and investment policies of the voluntary pension schemes. The funds goes under the safe custody of custodian or trustee who are the custodians of the depository property as well as the assets held in the banks or in the different forms of securities. Now there comes a question where SECP and auditors are monitoring the voluntary pension schemes. However, in case of Sharia compliant VPS schemes, there is another body which is Sharia Advisory Council in case of Sharia compliant VPS rules. So it looks very complex, but it's not so complex. You can invest as per structured product and regulations safeguard your interest in the voluntary pension schemes.
All right, thank you. I think we've covered the features and the benefits and the regulations, and now we come to the question and answer session. And I see we're already getting some questions here in chats. Okay, let's see. All right, we have a first question. Why choose GSIL or any other asset management company for that matter when you have a wide variety to choose from? So this is a very good question. How do you choose a fund? And the answer is not just returns, but also before you decide which fund to go with, you need to look at their management, their fund managers, their top management, their returns, of course. And if you're talking about GSIL in particular, let me just give you some facts. GSIL is the first private sector fund in this market and going back to 1995. So we have a lot of history, and you can look at our performance as well. We are amongst the top performing funds. Of course, you also need to see, is that asset management company catering to your needs or not? For instance, if you decide to go in a balanced fund, does that AMC even offer that kind of facility? So here are a few pointers, but definitely you should make, before you make a decision, you should do your homework.
Let me take a question of Kashim and Siddiqui sir, who has asked, is it Sharia compliant? Yes, there are many other pension funds which are Sharia compliant, but JS Investments also offers JS Islamic Pension Saving Funds, which caters your Islamic needs and investments according to the Sharia compliant regulations.
In fact, here I'd like to add that JSIL was the first company that introduced the Islamic class. And also another reason why you should invest with us is that we're offering free takaful on our funds, on our schemes.
Another question is, can the retirement age be deferred from the originally stipulated date in case the service tenure is extended? Yes, you can change retirement age or retirement date, giving 1 month notice period. It's flexible.
Okay, is there a minimum guaranteed return? Can you just go up a little bit? Okay, so since now you have to see when I explained on that slide where your money is invested. Your money is invested in 3 categories or subcategories. One is money market, which is relatively safe, and obviously it has less volatility. So we cannot offer guarantees of returns, but yes, you can choose between high volatility of the return or medium or low, and therefore you know what to expect at the end. All right, here's another interesting question. My company already deducts PF from my monthly salary. How will investing in VPS in addition to that benefit me? This is a very good question. And so we've addressed this, but let me give some details about this. So when you can ask your employer to invest on your behalf, and also your contribution can be invested in VPS. This way, you're in charge of where that money is going. We gave you the 3 classes. Obviously, the 3 classes will grow at a different rate. Money market is safe, therefore it will grow at a lower rate as compared to an equity or a debt fund. And secondly, it's extremely transparent. You will get all, you will get your statements directly from your company where you've invested. And so there's transparency, there's control, and you can withdraw. You don't need any permissions, as mentioned before as well. Do you want to add to that?
Yeah. Samat, despite the fact the company or your employer provides you provident fund facility, even you can, if you have a surplus funds, you can invest in voluntary pension schemes and enjoy the tax credit and other investment control management at your hand. There is nothing like you can rely only pension fund, provident funds, or the investments only can go through your employer. You have the choice. You can invest at your own.
Do we have any more questions or? Okay.
What would be the rate of return after 20 years if invested now?
Okay, so see, this depends basically where you're investing. And it would depend totally if you're in money market, if you're in equity, if you're in balance between the two, or you're in a debt instrument, and you just need to put in your expected returns for that asset class, and it's a simple, you will get your answer. But our advisors can help you plan in more detail if you want to know. We'll be sharing our numbers, and we can ask somebody to give you more details on that.
How will it be?
Or even you can visit our offices or contact our sales advisors. They can guide you thoroughly.
Okay, here's a question on inflation. How will it protect from inflation? Well, obviously you need to have a higher rate of return than inflation, and the only way for that would be to have some element of equity in your portfolio. And since we are talking about a long term and we are talking about regular payments, so that will ride the wave of the volatility of the stock market. Also, you don't necessarily need to invest everything in equity. You can have a balanced fund, which will, over a period of 10 years or more, it will give you a return which should be higher than inflation. Obviously, there are no guarantees, but generally that's the rule. Okay, can you guide us? Can you guide what factors should be looked into while selecting a VPS? So you have to start with that final amount, what you want at the end of retirement, and then work back to see how much you need to invest. Now, for some people, monthly amount might be better, for some quarterly, for some even once a year. So that all sort of amounts to what you want after retirement. Um,
Do you guarantee protection of principal?
okay, no, principal is not guaranteed. We are, like I mentioned, if you want to go into the lowest level risk, that would be the money market. And it has the shortest duration, the lowest volatility, and you can kind of have an idea of what the returns will be like as compared to the benchmark, but it's not guaranteed.
Is any type of insurance is attached with your product?
Okay, so yes, for us, if you're talking about GSIL, we offer free takaful on our conventional as well as our Islamic schemes. The company has to opt for allowing employees to invest. I think that requires an amendment with the tax department.
Yes, that may require the amendments in tax laws, but currently, if your employer choose to invest in VPS, the contribution of employer would be taxable.
But as of right now, they can invest their provident fund into VPS.
Yes, if you transfer your accumulated balance or part of the balance from recognized provident funds, that is not taxable. But
that's allowable.
Yes, but if company or employer opt to provide direct contributions from company's fund to the VPS, that is taxable at current tax laws.
Okay, let's see. Welcome. Oops. Okay, what is the ideal tenor for investing in VPS considering a current age of 30? Okay, so like we said, the right time is today. And if you're 30, that means you have 25 years, which is the maximum tenor, which means that you won't have to put aside a very big amount every month. If you're 55, then you obviously have to put a big chunk aside from your salary, which will take away something from today. And the longer you have, the better it is. I hope that answers your question. Rupees devaluation depreciates investment value. So what's yes, investor protection against it? Okay, so we don't have a scheme which will protect you against devaluation. However, we have the three categories that we mentioned. And you can have a balanced fund, you can have a pure equity fund. And if generally speaking, in equity, you do get inflation protection. And that, if we were to benchmark that against devaluation of the last few years, we cannot take into isolation any period and say, okay, this year there was 20% devaluation. We have to look at a time period of 10 years and more. So on an average, if you put your money in, or if you have a plan which involves investment in shares, yes, you do get a better return that more than inflation and devaluation as well. How much can we expect from a VPS contribution? How much? Amount? Okay, I don't get this question. The returns are not guaranteed. Let me repeat that again. To allow employees to have a choice of investing, VPS, the employer, will need to get their registered trust amended with the tax department. That's your area. You want to answer this?
You can only submit the contribution confirmation statement with the employer. and the rules are very clear. Under Section 63 of the Income Tax Ordinance, you can claim tax credit.
Okay. Do you want to answer this? All right, let's, some questions are, okay, we can get back to you if you feel you need more details on any specific area. Okay, since VPS does not allow joint holders, how can it be protected in case of any contingency? Okay, it's a very good question again.
Again, as I earlier explained, you can authorize nominee or your survivors at the time of account registration with percentage of share, and nominees can get their allocated share in case of any contingencies.
So you have to do the paperwork before you start investing, and that will take care of it. There will not be any hassles. It's a fairly easy process. Okay, we've answered this. Have you answered this question? G.
Will the company need to get their trust rules amended with the tax department if they allow employees to opt for VPS? No, if the tax department or the tax laws are changed, you don't need to even change your trust rules. The companies can offer you pension funds as an additional contribution or in replacement of provident fund. The contribution can go directly into VPS.
So as we give the benefits for the employer, this is one of the benefits that you don't need to get into the hassle of managing the pension fund because the provident fund, because it's a big responsibility you're managing on behalf of the employees. So under the current law, yes, you can. This is one of the reasons why you should invest the employee money into this program, the VPS schemes. The employee can directly decide, okay, I want to go for an Islamic fund, I want to go for an equity fund, or I want to have a balanced fund. So it takes that responsibility off the trustees' shoulders. You can also contribute your share of it, invest your share of it in the schemes as well, in the current law. So you don't need any amendment. Okay, now when we talk about specific numbers, if a person wants 50,000 after 20 years, for this we need to, obviously we have calculators. This is why we have specialists. They will help you work towards your goals. So for instance, in this case, you asked, this is what you want to put aside every month. And what am I going to get at the end of the year? So that's one way of looking at it. Or you can say, okay, I want this money at the end of at my retirement age, and then you work back. So you can work forward or you can work back. But for this, we need a detailed session and we can do the working with you. Our numbers will be there. Our email is there, and please feel free to call us later for more detailed discussion. All right. Okay, good. You can call us for further questions. That's great. Thank you. How would it be beneficial for students in future? All right. So this is, well, it is it's a way of saving, and it's a good way to inculcate the habit of saving. And obviously, when we talk about students, minimum age has to be 18, as we mentioned, which means that they will just be graduating in a few years and getting into the job industry. So therefore, they will start to get the tax breaks once they start working. But yes, it's good to open the account and use it as a saving vehicle rather than for tax purposes. Okay, we've answered this question. You can choose to invest in mutual funds. Yes, so if it's the person is a student, they can choose to invest in a mutual fund and not a VPS. That's correct. But like we said, if you have, actually it's a habit. So if you want to form the habits earlier, just open an account, start putting a small, maybe just part of your pocket money. And then in 2-3 years, when you start working, it'll just be very normal for you to just put aside a part of your salary into your VPS and start to get all the tax breaks for it as well and start your retirement planning without thinking. Otherwise, usually if you ask a person who's just joined, if you talk to them about retirement, they'll be like, what, what's that? So it's just developing good habits. What's the one point to convince me to move from the current? Okay, if you already have a current retirement scheme which and you want to compare it, so let's not get into names here. It could be any two schemes, and it's very good that you ask this question because you should. This is where transparency comes in. You need to be looking and comparing as a participant or as an investor who's planning for your future retirement. You need to be looking at what other funds are doing, what other pension schemes are, how are they performing. So you need to be looking at the management, at the fund managers, and at the returns, just to make sure that you're going to reach your goal at the end of your retirement. There are no shocks. When I say shock, I mean in terms of the amount.
There is a question, please guide whether nominees can be appointed during the investment period. No, you have to nominate persons at the time of registration of account. However, you can change during the investment period. Nominees are changeable.
So that's, it's just a form filling. You can change your nominees whenever. For instance, if your kids are younger, you might say after they turn 18, you might decide to change it in their name. So yes, you can certainly do that. Your status might change. You might get married later. So yes, certainly. Does GS provide an option to change the stream of investment from aggressive to balanced in VPS during the tenure of investment?
Yes, you can change at any time your allocation schemes, or even you can change your percentages within the sub funds. Yes, this is changeable.
This is part of the regulation. So yes, you can change. You are allowed to change as per, if you decide, okay, now I made this plan when I was 25, I wanted to put all my money in the stock market, but now I'm say closing closer to 40, I want to change. Or let's say you're not happy with the performance of the equity market. You might say, okay, let me shift it to a more safer avenue and decide to change the percentages like Malik Sab said. You can do that. That's well within your rights. And that's exactly why you need to choose this, because if your money is already in a PF, which is managed by your company and the trustees, yes, they're doing a great job, but they're doing it as for everyone the same way. So they are not going to be investing for each employee separately. They will be pooling that amount and putting it in one. And usually they choose a safer avenue because they are trustees on behalf of employees. They don't want to take too many risks. So therefore, when the choice is in your hand, you get to decide. And that's one of the very important features of why VPS is good for you.
Right. There is another question. After the retirement, if anyone will opt the option of income payment plan, so whatever the amount they will get, it will be tax exempt or not? Yes. If you invest from accumulated balance of your voluntary pension schemes into monthly income payment plan or purchase an annuity, that is tax-free if invested for a period of 10 years.
Okay, so this is a very important feature, and I just want to recap one point that let's say you've saved up and now it's your retirement time. So you at that time you have the choice of withdrawing 50% without any tax, attracting any tax. So that 50% that you accumulated will not draw any tax. The rest of the 50% you can reinvest to get a regular income for the next 10 years. So obviously your plan can go longer than 10 years if you want to customize it, but up to 10 years, it will, for 10 years, it will be tax free. So the remaining 50% will also be tax free. Okay, last question, I think, because we are running out of time now. If they don't have any earning in Pakistan. My question is related to tax rate for which they may not be eligible. Okay, so see, now everybody's tax situation is very different. If you're not paying taxes in Pakistan, then obviously you cannot take tax rebate. But it will be a good investment opportunity. I mean, you look at the returns of the fund you want to invest in, and if you think that meets your goals towards accumulating that amount at the end of your retirement, at your time of your retirement, then yes, you should be investing for that reason, if not tax reasons. Tax rebate is one of the very important points why you should be investing, but it's not the only point. So it provides you it's a vehicle for a very structured way of saving for your retirement. Right. I think we have another question. All right. Thank you so much. A very good point here. It forms a habit from an early age, and that's absolutely right. Saving is a habit, and sadly, in Pakistan, people don't save that much. So if you start early, even if you're not earning, it's about inculcating that habit. And yes, it's a good platform for that. So thank you, everyone, for being here with us. I hope it was, it was useful for you, and I hope it cleared some points. Any other questions? Please, you can call us, email us, or visit us. So thank you once again.
Thank you, everyone. Thank you so much.
Bye-bye.